Hey guys, Dan Heilman back with another video. Today we're going to be talking about the pullback. We're just going to do a short video today, just kind of giving a little update on what is going on. So as you can see, we are pulling back from this area here. We have some fib levels here drawn on the chart very simply. We have the top to the bottom of this little pullback here. If you don't know how to do that, you just press this button over here, fib retracement, and you go boom, ba-boom. We already have it on there, so there we go. So these are common points where we'll get some resistance. You can see right now we are at the 0.786 fib. We have tested it 3 times, so we could see some resistance here. We could come all the way down to the 618. We could come all the way down to the 0.5, which would also be some of these moving averages. Now, I did publish this 50 and 200 death cross, if you do want to use that indicator. I didn't realize there's some other ones on there. I couldn't find one originally, but it's basically just some simple moving averages that you can put on there. If I turn on my little trading indicators, you can see that my Camel Finance indicator is saying we should see a cycle low somewhere today or tomorrow. It doesn't have to be exactly that, so we'll see kind of what happens here. We did have one print short symbol on my market cipher indicator saying that there will be some downside. Now, again, we don't know where it's going to go. Could be this 91.9. It could be 96. I mean, we could go all the way down to 88 or even 83. I don't think we're making a new low right now, but anything in the world is possible. And we could also just literally blast off from here, you know, based on some news and other things. In a couple hours, we do have some retail sales. So this is kind of some recession info, right? Some, you know, economy info. How are we doing? Are people purchasing lots of things? Now, this is a lagging indicator. Month over month means all of last month versus this month, right? So that should be April data, I believe. And then we have Michigan consumer sentiment. It's interesting because I'm in Michigan, right? And it's funny that Michigan is like an actual metric that they look at because Michigan has, I think the reasoning is that it has a wide range of people. Political stance is pretty even in Michigan, but there's, you know, lots of poor people, there's lots of rich people, and everyone in the middle, right? There's a lot of middle class people in Michigan. I think that's why they have the consumer sentiment for Michigan. Also, there is a lot of auto industry and manufacturing here in Michigan, so that's probably another reason as well. And we got housing. If you guys did any research with the last, do we have it on here? Yeah, inflation, all of this. So inflation was up, and if you actually look at every single aspect of inflation, housing was up really a lot. I mean, housing was like what was it, a 5% or something, but then some other things were negative. So like clothing and apparel were negative, actually deflationary. And that's interesting because, you know, tariffs and everything, you'd think they'd be going up, but actually they seem to be deflationary, at least in terms of some things, you know. So we actually had lower than we thought it was going to be. Inflation rate month over month, they thought it was going to be 0.3. It was actually 0.2. You can see the previous was actually negative 0.1. So we had deflation for a little bit month over month. If we pull up the inflation, if we just go to Google and type in trueflation, you can see a more live version of it. Inflation is actually going up recently, which is interesting. If you look at the last, let's see, 6 months here, for the last, really since about April 6th, it has been going up. That's not a lot of data, right? But if you look as the 1 year here, you can see it has been going down a lot. We were all the way up at 3% in December, and then it went all the way down to about 1.2%. So inflation is overall going down, and might continue doing that. So that's what you kind of want. You want inflation to be coming down because then it's higher chance for the Fed to cut rates. Another thing you can do is go to CME group and let's go CME rate cut probabilities. There we go. Okay, so that's what we wanted. That's what we're looking for. What's going on here? Oh, I just didn't scroll down. I didn't let it load long enough. Okay, so June, we have a very high chance of keeping the rates the same. So this is the current rate, 425 to 450 means 4.25% to 4.5%. It says a 92% chance of staying there. Only an 8% chance of a rate cut. So very small chance to get a rate cut. If you do look in July, now we are factoring in some rate cuts. So this is saying a lot higher chance, 34%. So Usually when this is anywhere above 95, 98, there's really no chance of it. Now there is some slight chance in June. If you look at September, the chance of staying here is only 30% of staying at the current rate. So rate cuts are good. What that means is, in general, as rates come down, that means people are less likely to park their money in bonds, more likely to go into riskier assets. And it also sometimes means that the Fed will start printing some money, the good old money printer that everyone loves, because it increases inflation, but it also puts a lot of money in the system. And when the US dollar comes down, usually risk assets go up. And again, people are investing in risk assets because the interest rates come down. So if we go down here, you can see even all the way down to 3.75%, which would be very nice, especially because I have a big mortgage and I would love to refinance my mortgage. Now, mortgage rates don't always follow this perfectly, but we can actually look at mortgage rates. So actually you can just go here and you can say mortgage rates. You can see for the last, if we go to the weekly here, we will turn this off. Let's just go to my clean indicators here. What do we got going on? 6.7. You can see we were kind of high. We've kind of been topped out here for a while now. So yeah, hopefully we can get back down into these lower levels. But if you look historically, I mean, rates have been quite high. I mean, this is 1980s, but you can see they've been on average just going down and down and down. So honestly, I think the average rate is about 7%, and that's currently where we are right now. So I guess you can't expect it to, this was like historical, right? I mean, getting down to like a 2.6% mortgage rate is pretty insane. That was kind of the whole financial crisis, right, in 2008-ish. Where's 2008? Right here. 2008, we had the housing collapse and, a big recession, and that basically brought the rates way down. And it also meant a lot of money printing. So if you look at the M2 here, you can just search this M2 Federal Reserve money stock, M2 money stock, and you can see here, COVID 2020, they printed a lot. You can see they've basically been printing since ever. Obviously, they just continuously print money. So that's why the US dollar goes down in value. That's another thing you can look at, USDX. You can see it's usually just kind of going down in value. So this is only a little bit of data here, but you can see that is going down as well. Housing is even ticking up as well. Housing going up as well. So that might continue. And usually these kind of run in cycles, and we may see another collapse, something like this 2008, right? So this is 2008, and housing value collapsed 32%, but then look, boom, right back up. So it's actually funny. This is where I bought, this is where I bought my house, and then I sold my house about here. So you can see that was a pretty good time to buy and sell my home. I bought it here, I sold it here, so that was nice. I think I bought my house for $186 and sold it for $455. I did put a lot of money into it, not a lot, but deck and sprinklers and lawn and finished the basement, etc. But yeah, that's what's going on. If we look at commodities, gold right here is pulling back. It's almost like a little double top. If we do the trading indicator, let's see what it says. So it says this is not quite the daily low. It's thinking maybe this one will be. It's weird that it shows it here. That's kind of odd that it shows it way back there. You think it would show it here because it said this one failed. So I don't know. Come back down. Maybe July we get a weekly cycle low, and that's a potential trade there. Silver, what do we got going on? Silver is still kind of going down. It just printed a bearish signal. So could see this go a little bit lower, and that might be a good trade if you want to trade commodities. I'm also going to be trying out a new exchange for leverage trading. They are legal in America. They have a bunch of different pairs. They have spot, they have all of that good stuff. And currently right now they have up to $8,100 for new users. So I have a link below if you want to try them out. Feel free to do that. Just be careful when you're leverage trading, guys. It can be risky. And that's going to be it for the video. Just a short one today. Hope you guys enjoyed it. If you did, hit the like, hit the subscribe button. We will have altcoins come down as well. So Bitcoin dominance is going back up. I don't know if this is the top. We could go higher. And if we look at just kind of the overall total three, which is the altcoin market minus the USD TNC, we came back up and we hit this. A lot of, well, some people, Ben Cohen specifically and Into the Cryptoverse, says he thinks we're going to go down here. That would be kind of a big pullback for altcoins. That would be a 25% from here. So some of these, even like, let's see, I don't think is Ethereum in the total 3. I'm not sure, because this is one of the big caps. So I mean, like Solana is in the total 3. So Solana 25%. Where would that put us? About $128. It'd be a pretty big pullback if they all pulled back on average. That's definitely not guaranteed to happen. Could happen. You would, you know, just kind of keep that in the back of your mind, I guess. But that's it for the video. Hope you guys enjoyed. If you did, hit the like, hit the subscribe button. Have a great day, everyone. See you guys.